So today I want to talk about kind of an interesting subject. Let's talk about the difference between single family and multifamily properties that I've seen over the years. Of course, everybody can say, well, it's easy, Greg. You got one, single, family, multi. Let's break it down, people. More than one, multi. And they each have their pros and cons, right? So I want to kind of dig into that a little bit and help kind of understand some of the things that I've learned over the years as I've dealt with both sides, because they are unique and present their own challenges, but there are rewards in each one of them uniquely as well. Now I want to dig a little bit into the residential side just a little bit today, because a lot of people start in real estate in the residential space. There are people that they've gotten exposure and education, all kinds of things, and they can start in the commercial, but a lot of people who are just kind of struggling, just starting out, trying to feel their way in real estate, they go with what they know. And what they know is, I live in a house, right? I live in a house, I live in an apartment, this is what I live in. So I'm gonna go with what I know. And I know houses, I can buy a house. Grew up in a house, I grew up in an apartment, whatever. I know residential. Not sure how an office building works, okay? I'm not gonna go buy the Empire State Building on my first real estate transaction. You're just not gonna do that, okay? Maybe you will. So if you did in the comments, please let me know, but probably not. So let's kind of delve into that, because I get asked all the time, hey Greg, how did you start out? What was your first deal? How did you go from single family to multifamily to apartments to doing different things? How did that kind of evolve? What did you learn about each one? Which one do you prefer? I get that a lot. Which one do you like the best? So let's kind of peel it up, because after 20 some odd years of doing this, there are some things, some differences and some commonalities in the single family versus multifamily. So let's kind of dig into that just a little bit and kind of get your exposure, because I know that in the back of your mind, you're sitting there doing the same thing, right? Well, I'd really like to do this, but then maybe I want to do this other thing. Where should I start? I get that a lot. Where should I start? I'm like, well, start at the beginning, like do something, right? That would be a great place to start. So let's talk about single family, because a lot of people, hey, they grew up in a house. They know what a single family house is. Maybe they already own their own home, and now they're starting to think about investing. And so in a single family world, it has some unique characteristics different than the multifamily, right? Typically in a single family space, and in the finance world, they kind of classify that into 1 to 4s, single family. And some of these characteristics are okay with that. But when you start to get into duplexes, triplexes, quadplexes, some of these things kind of go away. And we'll kind of touch about that. Some of it's more like the multi. But in a single family, I typically get fewer maintenance calls from my single family tenants. They kind of come out on the front porch and they go, man, this is all Greg owns. He's kind of saving for a rainy day, maybe to help his family, whatever. I'll take care of that. I'll change the light bulb. I'll sweep the porch. I'll mow the grass. I'll take care of these things. I don't really need to call Greg on a Sunday afternoon to come plunge my toilet. I can do that. Okay. So there's that kind of aspect where they sit there and go, this is kind of all he owns, is right here. They don't have to know that I own the 1-2 doors down and 2 blocks over and other things like that. I own 20 all around them. They don't have to know all that because when I show up to service them, or my crew shows up to service them, we don't really talk about all that. Okay. They don't have to know. In a single family property, typically there's a little bit more per unit cost when you go into that. You're competing against buyers that are also wanting to live in the home. So typically you have to pay a premium per unit. You don't get any kind of multi-unit discount when you're buying one house. So there's a little bit there. However, you can get some better financing on 1 to 4 single family. So even up to like 97% loans, things like that, FHA qualify on the single family. So even though you might pay a little bit more, your actually cost out of pocket or cash out of pocket might be a little less than a single family, which is kind of interesting. So that makes kind of a lower barrier to entry for the acquisition cost. So it's kind of rare in an investment, especially in your first couple, that they're going to ask you to put 30% down. Okay. Now, once you kind of max out with your FHA qualifications, those things change a little bit. But after you buy a couple, they're going to start sending more over to the commercial side of things for the banking, and so then they're going to ask you to put 20% down. But we can talk about sometime about how to get around that a little bit, kind of help with that. One of the big downsides, though, of single family is, you know what? When your unit is vacant, you are 100% vacant. Okay, nobody else is paying that rent, so you better get that puppy turned over really fast. Okay, because your mortgage bill is coming up, right? Your mortgage bill is coming up, the property tax accruals, all that stuff is happening no matter if there's a tenant in there or not. So when you lose a tenant, you are vacant. Okay, so that's a real differentiator in the single family space, right? In the multifamily world, what's nice in that 2 to 4 kind of range, even 2 units and up, what I really like is just, man, I've got one roof. One roof covers multiple tenants. That's fantastic. If I show up at a property, I can take care of multiple tenants' needs in one trip. I don't have to service 3 tenants. I don't have to go to 4 different zip codes, okay, to get that done. I can just show up to one place and take care of that, or my crew. However, in the multifamily space, you know what? You have common area type maintenance. So it's hard to get a duplex to each mow their own grass. When I say duplex, I mean 2 units. So it's hard to get them to mow their own grass, because eventually what's going to happen is the one guy's going to complain about the other guy, how he doesn't take care of his grass, makes his yard look bad, all that kind of stuff. There's some of that kind of stuff going on. So typically there's dumpsters, there's other things involved in a multifamily. So there's some additional cost in there to kind of maintain those common areas. The other thing that I see a lot in a multifamily space is I do get a little bit more maintenance calls. They walk out on the front porch and they go, man, Greg's responsible for all this. If he's got all this, he has a full-time maintenance crew and a 24/7 response time, right? I can just pick up the phone anytime I want and call Greg, text him anytime, day or night, text him on a Sunday night and tell him about a heating and air system that's gone out that I knew about on Wednesday and that he needs to get over right now. So you've got that kind of thing going on. Whereas in a single family space, they don't know about all that. If you own more than 1 unit, you're rich. Okay, just get used to it. You are rich, because the fact that you own 50, you're rich. It doesn't matter how many bills you have to pay, doesn't matter anything, but you are rich and you need to come fix this for them. Okay, it's just how it is. Just get used to it. It's just how it goes. But in a multifamily situation, you know, like in single family, our per unit cost is higher, but you tend to get some kind of per unit cost premium break discount on that. So if you're buying 100 units or 20 units, it's usually cheaper by the unit than if you were trying to buy 20 houses, right? The other thing that's interesting is that in the multifamily space, it's based on the net income of the property. And we'll go through this at some point, but it's called net operating income. So the valuation is based on that net income. It's really not based on, hey, look, Sally bought a house just like mine. She paid this. And that's what mine is now worth. No. In an apartment space, multifamily space, generally over 5 units, they start to look at the income that it's generating and then compare the rates of return. So if I want to be competitive and I want to get a strong valuation, strong price on a resale, I want to sell my property, then all I have to do really is kind of manage that income and expenses, right? And once I drive that net profit up, then my valuation goes up. So that's kind of unique too. Whereas in a single family space, it is kind of comparable based on square footage, number of bedrooms and baths and garages and other things like that. So that's a little different. And over in the multifamily space, you're buying and selling to and from investors, a little bit more professional type transaction. Whereas, and very mathematically oriented. When you're dealing in the single family space, you're buying from maybe other investors, but typically end user sellers, and you're selling to investors and or end user sellers. So sometimes there's a little bit more emotion driven in those buying and selling transactions. So in the multifamily space, though, there's going to be a larger capital requirement, right? There are some programs that give better lending programs than others, but typically you're going to be expected to come up with 20 to 30% down, give or take. And so it's going to take a little bit of cash there, right? And the deals are bigger, just more commas and zeros. That's all it is. It's just numbers. It's just money. Okay, but they are big. Might even be able to pull together partners and put together a joint venture or that kind of thing to kind of put together a plan for that. We're going to peel back some of these things in future segments and kind of dig a little bit deeper into multifamily and dig a little bit deeper in single family. Maybe we broke into some commercial, but I really thank everybody for tuning in today and joining us. Hope you enjoyed that last video. If you did, like and subscribe. If you didn't, well, forget about it. Move on to the next page. But check out some of our other content at edu.branchwealthpartners.com and get educated.